Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
Hello and welcome to ETMarkets CryptoConclave. I'm Miloni Bhatt. From a ban to a steep tax, India has certainly moved along when it comes to crypto. How is the 30% tax on crypto profits and the 1% tax deducted at source, other tax requirements on virtual digital assets, as termed by the government, play out on the ground? Is there clarity or confusion still? To answer this and some other questions, I have with me Anoush, Bhasin and Meyyappan, Nagappan. Anoush is a chartered accountant and founder of New Delhi-based cryptocurrency tax advisory, Quagmire Consulting. Anoush, welcome.
Thank you. Nice to meet you.
We have with us Meyyappan, who is a lawyer, and he works with Nishith Desai Associates, where he is the leader, digital tax and social finance. Meyyappan, thanks very much for your time today.
Happy to be here.
All right, first to both of you, and Anoush, maybe you can begin. In the tax bill as set out in India, is there any part that you feel is still causing confusion among investors and stakeholders?
Yeah, Miloni. Well, at the outset, this was a very, very welcome and a very positive step for the tax bill to have come out. But I think if you read into it, even at any of the provisions, it does seem that a lot of clarity is needed. I take, for instance, the 1% TDS provision, or whether you are allowed to set off your losses against your profits at the end of the year. There are a number of provisions which aren't worded clearly and are causing a lot of fear amongst the investor community. And yeah, we are expecting a lot of representations to be made for obtaining clarity on this. But I think these are the two main things that we should expect some sort of clarification on.
Okay, Maya, your views?
Yeah, to add to that, I think it was a bittersweet sort of an announcement, I think, because there was some clarity that has come through. I think initially it was seen as a sign of legalizing crypto, although I think I had a different view right from the beginning. But having said that, I think there are several open questions: valuation, gift tax. I think given the representations that have gone out are focusing more on certain sets of companies and their interests, and not necessarily the general public, because individuals, I don't think, are up to speed on the fact that there could be significant tax implications or how even TDS may apply to them. So I think, yes, across the board, all stakeholders, exchanges, traders, and so individuals are also likely to be impacted by this due to the lack of clarity.
All right. So, everything that you have spoken of, Anoush and Meyyappan, we'll take that up further as we continue our conversation. But the second question that I want both of you to respond to is, apart from warning and dissuading small investors who should be informed about the high risks with crypto, everyone should be, but what, according to you, could be the underlying reason for this very high tax set out by the government? From your vantage, Anoush, you can.
Yeah, I think the Indian ecosystem really got involved in this space since the pandemic hit, and since 2020, a lot of people have either tried to diversify their portfolio by getting into crypto, or because of excess time on their hands have gotten into crypto. So the space has really slingshot from the last 2 years, and because of that, also a lot of scrutiny has come into this space. The government knows that a lot more retail investors are getting involved, and possibly if you also see the price trend of Bitcoin or any of the similar assets, it has done multiple folds in the past 2 years. So that I believe may be one of the reasons for the government to feel that this is a market where people have made multifold returns, possibly making majority of the investors in this market fall into the 30% tax bracket. That's one, as you rightly said. A possible dissuading or discouraging factor may also be considered. But I think overall, if you look at Bitcoin or this industry since the beginning, since the last 10 years, people have made generational returns. And anybody who talks about being successful in this space, the returns have been unbelievable. So I think that has played a major role in the government determining that this is a volatile market, but people do make tremendous returns. And possibly that's why, if you were to look at different tax slabs, then 30% may be the most applicable tax slab.
So it's like a revenge or a sin tax. Maya, what are your views?
So I don't think, syntax, I think is related to what I was about to say. I don't think they're viewing it as a syntax so much as because the regime is similar to gambling income in terms of 30% flat rate and, not allowing for any losses. But I think apart from revenue generation as a possible reason, right, what Anoush said, I think one other underlying thinking which may be driving this is that they see there is the thinking that bitcoins don't have inherent value, cryptos don't have inherent value, and this is all speculative trading or sort of casual income of that sense. So I think that's what is driving them to treat this as similar to gambling winnings, right? So that's another reason why I think they're probably thinking of it that way.
Right. Is there a clear categorization, when we see this tax bill as is, for who is an investor and who is a trader in crypto? And I ask this simply because, one particular transaction in crypto seems like multiple transactions anyway. You go from INR to a crypto to perhaps another crypto to a stable coin and then perhaps back to INR. So how do you judge?
Maybe I can start and Anoush can.
Yeah. Maya, this is for you.
Okay, so I think on that, I think we've had some notices go out to several people last year, over the last 7-8 months. And we've had this challenge where, in terms of explaining to the tax authorities why somebody is not a trader. Because as you rightly said, the market practice is to, if you're trading in crypto to INR pairs, you typically tend to also trade into USDT or Tether, which is a more stable form of currency. So when you want to preserve the value, you kind of trade into that and then you convert it to INR at a later stage. So even a very simple sort of a transaction would be crypto to USDT, USDT to INR, and that makes it look like a large volume of what similar to what a trader would do. When in fact the commercial intent is not to be a trader. I mean, we have seen situations where sons are given gifts to their parents who's a retired employee who just wants to convert it into INR and then keep it in a fixed deposit, but they've done it in a multi-step process. So we've had challenges explaining that, but generally yes, volume of transactions, the kind of it comes down to the facts of each case and how we are able to sort of defend it. There's not any clear guidance on it, but I think the closest sort of thing that we try to benchmark it to is there are some clarifications on trading of shares and what is the intent behind holding it. But even then, as I said, there is a big disconnect between intent and what people actually do in terms of market practice here.
Do you see that as being confusing on the ground to investors, when they start paying their taxes?
Yeah, I think each investor is having to take advice from advisors like us to see what is the best position on their facts to defend, because ultimately the intent is they don't want to get into litigation. They don't want the tax department to come back and say, oh, why haven't you paid 30% as business income as opposed to 20% as long-term capital gains, right? And that kind of lack of clarity in a highly litigative environment, I think just gives a lot of opportunities for tax departments to raise notices and create disputes.
Right. All right. Thank you for that. Anoush, I want to come to you on the 1% TDS, which the government wants to levy from 1st April. If you could just briefly explain at what point in the chain of transaction does it come into play, and what could be the potential fallout of that? And then I have a few other questions linked to that.
Sure, absolutely. So the 1% TDS is primarily the government's way of getting visibility on the entire crypto ecosystem, all of the transactions. At the moment, the kind of transactions that happen are extremely vast. There may be an on-chain transaction when I'm sending Bitcoin to you. There may be a transaction on a centralized exchange where the government could potentially send a notice and get information, or there may be a peer-to-peer transaction also where I'm transacting with a peer-to-peer on the decentralized exchange. A number of these transactions are a sort where the government has no visibility. And to ensure that the government gets all of its data, they have imposed like a 1% transaction tax, which typically the buyer will have to deduct when he is buying any asset from the seller. So every time there is any purchase or sale transaction, the seller will get 1% less in either his bank account or whether it's in his crypto wallet as well. That's how it should be done. Now the potential fallout is implementation. number one, if there is a commercial trader and he trades, say, 1,000 times a day, if he loses 1% each time of his capital when he's trying to buy or sell, that's going to make him lose, I think, up to about 99% of his capital over 300 or 350 odd trades. And that makes his business unviable. Number two, if I'm transacting on a decentralized exchange, or if I'm transacting on chain where even I don't know who is the other person who I'm sending the digital asset to, there's really no way for me to get information about his PAN, about his personal details, what country he belongs to, and then depositing TDX. And lastly, transaction in the crypto space happen at the speed of light. There's an opportunity for arbitrage for literally, say, a minute or two. You cannot be able to deduct TDS, deposit to the government, and then transact. There are multiple issues with this. I think number one, the government, what they need to do is move the liability of TDS, or move the responsibility of TDS compliance onto a centralized exchange, or basically marketplaces or aggregators that could possibly make it easier. And number two, they still need to come out with clarity on how really these on-chain transfers need to be compliant with TDS law.
Yeah, so there is confusion. In your opinion, is the 1% TDS even practical? And do you see this leading to lower volumes, consequently lower tax?
Yes, absolutely. Most of the people who are involved in crypto trading are high-frequency traders. And this is definitely going to impact their trading activity. A lot of them are already looking at moving overseas or having overseas setups in place, because in countries which are crypto tax friendly, and these sort of compliance requirements are not there. And at the same time, while a small set of investors are retail, they don't trade too often. Even for them, it is a significant compliance responsibility, which may deter them from really getting into this space a lot more. So I do feel that, number one, the percentage or the rate is extremely high. Number two, the process of implementation of this TDS is not clear yet.
Yeah. So that brings us to that first point that we discussed on the government essentially wanted to dissuade participation in this asset class. Maya, to you, what are the tax implications for those who mine crypto? Though the community is very, very small in India, and what about tax treatment on peer-to-peer transactions where users will buy and sell crypto among themselves? There's hardly KYC. Participants could be sort of sealed from traditional laws. How will this be dealt with?
So in terms of crypto miners, I think currently the way the provisions are worded, they only talk about income from transfer of a virtual digital asset. So typically, typically when it comes to mining, usually you either mine it yourself or you do it as a service for someone else. So when it is a service, it shouldn't qualify as a transfer of a VDA and may not be applicable. And when it comes to mining it yourself, there could be questions around what is the cost of acquisition, when you subsequently transfer it, on what basis do you calculate the gain? I think those are the two things that may come up. But having said that, there are many representations that have gone out, and I think there is likely to be some level of tweaking with the provisions, and we'll have to see how it finally pans out to assess the risk on crypto miners. The second thing is, in terms of peer-to-peer trades, I think that's the bigger practical risk. And so as Anoush was saying, the 1% tax, the policy intent is clear that they want to track all the transactions, but you are in fact going to, with a very high rate, 1% is a very high rate, compared to the securities transaction tax, which is a 0.0125. You are likely to chase people away from exchanges to do more peer-to-peer transactions or outside the country, right? So it goes into the gray market or the black market. And if it's a peer-to-peer transfer, it's very difficult to even get information from someone like a centralized exchange in that case. So practically how the department is thinking about enforcing it is, I think, unclear at this moment. And I would think actually the 1% TDS, the ultimate effect of it is counter to its original policy intent, which is to track all transactions on the exchange.
Many banks like ICICI, they've disallowed the use of the liberalized remittance scheme under FEMA, through which Indian citizens can send up to $250,000 abroad per financial year for education and whatever. Can you tell us, one, if it's banned under law, once the money is outside India, that's two, the the bank may possibly have no eyes on it or not be able to track on what's happening with the money. People may use it to invest in crypto. In this case, how does the government then ensure compliance?
Yeah, so I think on that, there are depending on the type of crypto asset. So there is a legal aspect to it, and then there is a practical aspect to it. On the legal side is can you buy crypto outside of India directly, right? I think on that there could be arguments. It's a gray area. The banks and the regulators haven't come out clearly on this, but based on existing regulations, depending on the crypto, it is possible to argue that at least on certain kinds of crypto transactions, it is indeed legal. But there could be several others depending on the type of crypto which fall foul of the regulations. Secondly, when it comes to LRS and you take the money out and then enforcement on what you do with that money, I don't think that's just necessarily crypto specific. I think, right, I think that a compliance issue or an enforcement issue has been for several years. And that's just going to be more exacerbated because of the crypto trades that people want to do. And what's driving that is really that people want to buy it at a certain price outside and sell it in India and make the gain on the arbitrage. So that I don't see that going away. And as far as enforcement is concerned, typically it is on the banks, who are also limited in terms of how they can track it once the money is already gone out. I don't see a clear solution for that yet. And that's just we'll have to wait and see.
Everything that I hear from the two of you is there's no clear solution. It's still a gray area. There is a lot of uncertainty then. There is a lot of clarity which is still required from the government. We had this come out in February, the 1st of February, and then, we're in March right now. When are we expecting this clarity? Because this hits us on the 1st of April.
You want me to go first?
Yeah, sure.
Okay. Yeah. So as you rightly said, these provisions become applicable from 1st of April. However, because it's just the beginning of the financial year and the compliance only, at least the annual compliance is only required 365 days from then, we do have some time. The bigger question is around the applicability of TDS and how that will be implemented. Again, the government has given a timeline of 1st of July for that to kick in. And as Meyyappan also said, a number of representations have gone out, especially from the marketplaces of the aggregators to whom this is going to impact the most. For somebody who's trading on chain or who's just trading peer-to-peer, he may think that he'll wait for the provisions to sort of become applicable, and until then there will be clarity. But for the unicorns and for the marketplaces who have raised a lot of money, and this really defines how they are going to operate for the next year or so, they are actively lobbying with the government, trying to get a solution in, number one, how this is to be implemented, and number two, trying to also get the percentage of the TDS down. If you also look at the fee that an exchange or marketplace charges, it's typically 0.1, 0.01%, which is like 10 basis points or 1 basis point. 100 basis point TDS is going to be very, very difficult to sustain the trading industry in India.
On tax compliance, Anoush, crypto is volatile. Value of it will differ through the day across exchanges, across geographies. If one wants to calculate tax, that's going to be challenging. As an investor, how should people manage this? Because depending upon the transaction, the value, the tax liability will shift.
Sure. So the tax liability per se would not shift, because the tax is computed when you exit or when you book a realized profit. So there will always be a stable value against which you have to benchmark your return, whether it's US dollars or it's INR. And you can get this information from an Indian exchange, from an overseas exchange, or from data aggregators like CoinGecko, CoinMarketCap. So every time, so for example, if I bought for 100 and I sold for 120, I will be booking my profit against INR. And that's when I know that there is a 20 rupee profit that at the end of the year, either I'm allowed to set off against a few losses or I just pay tax on that. So that's not really the difficult part. The difficult part is there are so many trades. There are like thousands of trades, 100,000 trades. and it becomes very difficult to know the historical price of each asset. And you're also trading on multiple exchanges if there are possibilities of arbitrage. So you need to combine and aggregate all of those reports, then use something like a first in, first out to understand what is a profitable transaction, what is a loss-making transaction, and that's where it becomes really complex. So there are a number of tools which let you basically import your transactions from all exchanges, and then they do all of the heavy lifting for you, and they give you a profit and loss at the end of the year. However, a lot of these tax tools don't currently support Indian exchanges. That may be a downside. I'm sure a number of tax softwares are being built in India since the time our honorable finance minister announced these tax laws. So it's going to be automated to a large extent. Only retail investors who have, say, 4 or 5 transactions can do it themselves. Otherwise, everybody's going to have to rely on a tool. Also, a best practice is always to download your reports or your statements or your transaction logs from your marketplace or your exchange every month, every quarter, every 6 months at least. A number of times we have seen that the marketplace has shut down, for some reason got hacked, for some reason decided to shut operations, and then investors no longer have access to that data. So as long as you are able to download your reports in good time, maintain proper records, and then use either a professional or an expert tool to calculate your taxes, I think that's how we're going to see this space headed into compliance.
All right. I think you and Maya both mentioned that, it might deter people away from this ecosystem, from the crypto ecosystem, because of all the compliances that have been put in place. So, Anoush, does the stock market look like a more profitable endeavor now? And the entire idea, if the government wanted to dissuade people from crypto, was perhaps to make them a little more cautious and aware of the risks around crypto. Do you see people becoming more cautious?
Yeah, I think the answer to that is not the return. It's really the fundamental of why you want to invest in crypto versus why you want to invest in the stock market. You may believe in a certain company and its financials and its growth trajectory, and you invest in that. But if you're really in crypto, you're probably in it because of the decentralization. You're in it because you want to bet against centralized institutions. You want to hedge yourself against, say, inflation. You want to hedge yourself against centralized power and basically manipulation. And that's really the reason why people get invested into crypto. And that isn't really changing with the stock market. Yeah, your returns could vary a little bit, but if you were also to see historical returns, whether, if you would have invested $100 back in 2011 or 12, and where you would be today versus the stock market, there's a sea difference in what kind of returns you would have generated. Short term, yes, comparison, the stock market may seem more lucrative. Also, in terms of the compliance issues now, the stock market may seem lucrative, but I'm of the very stern view that the fundamental reason why you're investing in this asset class is vastly different, and there's never been anything like this since before. So I don't think people are going to move to the stock market just because compliance is a bit easier or the returns in the short term are a little better.
All right, Maya, what are your views?
So a couple of things. I don't think the government, when we say government, and having worked in the government, I think there are different arms of the government which I know have different views. So I think apart from RBI, no other arm has come out strongly decrying crypto or saying this is bad. So I don't see the tax move as something saying it is intended to discourage trade. I think they have just treated it similar to gambling, and to say that, okay, this is speculative, we can generate revenue from this. So that's one. Secondly, from an investor perspective, I think while traders are likely to move away, I do see many common investors otherwise who don't understand the legal or tax risks probably getting more into the space. In fact, if you see the day on which the announcement came, there was a huge spike in terms of user registration on many of these crypto platforms, which is counterintuitive in that sense. And anytime people have asked me, whether they should invest in crypto or not, as a tax advisor, all I say is that, you make an investment because you want profits. And unless you know what the taxes are likely to be, you don't know what you're in it for. It's a high risk from a legal and tax risk perspective. There are enough taxes to wipe out your entire gains or put you in a net loss position as well. So, and which is why the clarity cannot come in fast enough for me, because we might say at the end of the year, yes, from a compliance perspective, that's true, but should you be trading today or not if you don't know what your net gains after taxes is likely to be? I think the answer should be clearer before you make the investment. So And some of these issues are things we have been highlighting since 2018 at the very least. So I think it's been 4 years. It's not, I think once the boom has come in, government has put its focus on it. But clarity on many aspects, including valuation, including on, I think while Anoush spoke about the INR and crypto trades, I think valuation is an easier gamble there. But with crypto to crypto trades, it's very tough to say on what basis, what INR basis will you have to pay taxes on. And there is no rules regarding how valuation works in those cases, either for TDS or for discharging 30% tax. So there are many things that government still has to come back and clarify, and they shouldn't be left to individual tax officers or courts to decide on a case-by-case basis.
Yeah, because one will decide one way, the other may decide the other way, and then there's just chaos. So I read somewhere that one of the someone who runs a crypto exchange said that they see taxation spurring corporations who stayed away because of the lack of clarity on crypto, adopting crypto. How do you see that, Maya? Do you see that happening?
So there is a lot of interest, and I think the lack of clarity on the legal side more than the tax side may have kept foreign corporations away, because tax is something that they can still factor as a cost of doing business, and while that might still preclude certain kinds of businesses from getting in because it's not profitable enough. I think legality is a bigger risk, because the sword hanging over a crypto ban, potential crypto ban in the future, and an entire business being shut, I think that's a bigger concern for the businesses from getting into the space many times.
All right. Anoush, how do you view the steep taxation of crypto without investor protection? There's very little that shields investors from scams, from rug pulls.
Yeah, I think investor protection should have come a lot sooner. Something like the ACSI guidelines, which have come in around advertising now, should have come in back in, say, 2015-16, when really the platforms were just, very nascent states. They were just growing. This is a very, very different market. It's a 24/7 market. There are no circuit breakers there. You may go to bed one night thinking you're in profit, and by the morning, the situation has completely changed. It's a very difficult market to stomach. You have to really learn. And that's where I feel investor protection should come in, irrespective of whether the government has really legalized it as a security, as a commodity, or as a different asset class. Also, irrespective of whether the government has taxed it or not. I'm not saying that it wasn't taxable before. It's always been taxable. That's the position. But the investor protection should have come in since the time the RBI started issuing cautionary notices to investors, saying that this is volatile, this is not recognized, do your own research before you invest in it. And I think just since 2020, the regulator has known that a lot of people have been investing in it. The government came out with a very draconian bill back in 2019, which potentially could have put people in jail for trading crypto for a sentence up to 10 years. There has always been conversation, but really no guidelines have come out around investor protection. There has been no initiative by the government other than just warning investors. So I feel that's very important. The government, unless they completely stop people from going in through a complete ban, it is the government's duty to come out with some sort of initiative or program around investor protection. Now, even now, if you look at taxation, they are trying to discourage, but they're still not educating about the risks associated. So I think it's very, very important. The advertising guidelines are a welcome step, but I think there's still a lot of work to be done to educate our retail investors.
And what are your views on the taxation without investor protection?
Absolutely. I think with the kind of volumes we are seeing with, you can buy crypto for 100 rupees. There is traction from all kinds of age groups, from tier 2, tier 3 cities. I don't think, my sense is, I don't think they understand the level of legal risk or tax risk associated with these products. And that's something that I think the government should definitely put a clear tax regime, educate people about it, then what choices the market makes, that's up to them. Right? The whole thing about markets and exchanges or price discovery, etc., is about having proper information, having a well-informed public that's participating in it. And I think that's the government's responsibility to be doing this at this stage.
Right. There is no regulatory framework for crypto in India still. Do you think that by recognizing its value as an asset, promoting it, do you think it paves the road for its, ultimate recognition as currency? Oh, yeah.
So again, I think as currency, there is its classification is really difficult. There are different kinds of cryptos, and you can consider it a currency or a commodity or another kind of a derivative or some kind of digital representation of any underlying contract in the case of NFTs, for example. So the range is very wide. I don't think all cryptos will fall under one bucket. When I say cryptos, it's tokens, other virtual assets. And regulation, except I understand the RBI's concern, which is, they are in charge of making sure that foreign exchange doesn't leave the country and, create a sort of a larger financial risk for the country. But I think promoting a domestic market, I'm sure even they shouldn't have a concern regarding that. So coming out with clarity on how to define these products, it will be an ongoing exercise. I know the practical reality is that things are moving very fast. Every day we receive different kind of queries from clients. They are also innovating and trying something different from what others are doing in the market to differentiate themselves. And we have these set of very, very dated laws, not even an attempt to try and address these sort of concerns. Advisors, we try to see where is the best fit under the current law. So I think there is a lot to be done, and it's going to be it should be an ongoing conversation between stakeholders, industry, and the government. And to try and come out with a regime that is clear and that is helpful for everyone. There is going to be back and forth. It can't be a situation where there's a knee-jerk reaction and something is brought up here and there. I don't think that's good for the government or for the industry. So that's what I would like to see, because I don't think it's real practical to expect the government to come out with a clear set of regulations from day one. I think it's an evolving landscape, but I think more communication, more consultations with the industry, I think there will be useful feedback to take into account and iterate and evolve over a period of time towards a stable regime.
Your views. By taxing crypto, do you think the government is recognizing its value as an asset? The government is recognizing its value as an asset. Do you think it paves the road for recognizing it as currency?
Sure. So one very important clarification I want to bring in here. I think we haven't said it very explicitly on this session, which is that just because it is being taxed, it is being recognized, or it is being legalized. That's not correct. The government can tax any income, including smuggling, kidnapping, or literally anything. The legality of income, is of no consequence here. So the tax department or the revenue is not the correct authority to regulate it. So at the moment, it is completely unregulated. Now, if we look at the sequence of events back from say 2018, when the RBI put in a ring fencing circular restricting banks from getting involved in it, to a draft bill in 2019, which wanted to ban crypto completely, there has been a change in heart. You've seen the government, or you've seen rumors of so many monsoon sessions, winter sessions, that the ban is going to come in, a draft bill is going to come in, and we're only left trying to determine what the bill contains just by the broad name of the bill. And really, while it was called the prohibition of cryptocurrencies before, it's now called the regulation of cryptocurrencies. We still don't know what we're going to see, but just based on these series of events, we do feel that there has been a little bit of change of heart. The government is now trying to understand why are so many people getting involved in it? Why has there been such a spike in volumes on marketplaces and a spike in registrations? And I think at this stage, the government is still not ready with a regulation. So at least coming out with tax clarifications was extremely important. While the 30% tax may discourage new investors to some extent, but I think this was the government's stopgap measure of saying, okay, we're looking into this, we're doing something. It's still going to take us a while to figure out. It's a very fluidic industry. While the government tries to regulate, say, a payment token or a utility token, there is an NFT, there is DeFi that's going to come up, and then the government is going to be, left further behind. So a regulatory framework, in my mind, is going to come. And when is it going to come is
we don't know.
Your guess is as good as mine.
Yeah. The government seems to think that, blockchain is good, but crypto is bad. I mean, that seems to be the kind of thinking, at least when they put out their views and stuff like that. But, let's see. We'll see how this goes. India's finance minister, Nirmala Sitharaman, recently said that, many Indians have seen a future in crypto, and so I see a possibility of revenue in it. And perhaps this revenue will come from the steep taxes the government has levied effective 1st April this year. though you all have argued that the revenue pool perhaps could be larger if the taxes were rationalized, especially the TDS. And of course, there is a lot more clarity that stakeholders want. But for now, this is it. India is witnessing this phenomenal growth, and it will be interesting to see, how it impacts this unregulated asset class in India. Anoush, Bhasin, and Meyyappan, Nagappan, thanks very much for your thoughts and for your time today.
Thank you.
All right. From me, Maloney Bhatt, and everyone here at ETMarkets, it's a wrap, and we'll see you soon.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.